Hey everyone, and thanks for jumping back into the equityverse. Today we're going to talk about GameStop. So if you guys like the content, please subscribe to the channel, give the video a thumbs up. Also check out the Telegram channel, which you can find a link to in the description below. Note that the Telegram channel is not the one that I normally link, which is Into the Cryptoverse, but this one is a different Telegram channel called Into the Equityverse. Let's go ahead and jump in. So this is a good example of it doesn't necessarily take a cryptocurrency investment to see a 10x in a relatively short period of time. Over the last few days, few weeks, since January, say 12th or since January 13th, at the present price, the present valuation, GameStop is up about 1,000%. To the top of the wick, it was up over 2,200%. This is a pretty substantial gain in equities in a very short amount of time. So you might ask, well, what is going on? Why is GameStop going through the roof? Well, there's a number of reasons, and we're going to briefly outline them here, and I'm going to give my general thoughts on some of the dynamics between what's been going on. So, what happened essentially was that a lot of retail investors got wind that some larger hedge funds were shorting GameStop, and it turns out that there were more share. It was shorted to GameStop was shorted to a degree where more shares, it was shorted higher than the amount of shares that even existed. So think about that. It was shorted like 130%, 140%. I don't know exactly what it was, but it was more than the number of shares that even existed. So first of all, that should be a problem, okay? And we'll come back to that later. So what happened was these retail investors, a lot of these retail investors on this subreddit called Wall Street Bets, realized that it would not take a lot to potentially cause a massive short squeeze on Wall Street, because a lot of hedge funds on Wall Street, obviously there's some major ones that are making the news, but then again there's a lot of copycat ones as well that aren't necessarily making the news. By the way, I should say that hedge funds losing money is not news. This actually happens all the time. This is why like the average lifespan of a hedge fund is like 2 years, is because if they if 1 year they perform really poorly and then the next year they do really well, they still have to outperform the carry from the prior year to take, the profits they want to take. So a lot of times after a couple years, they might just dissolve it and create a new one so they don't have to overcome the carry. So that's one thing to consider. Hedge funds go out of business all the time. Okay, so this is not really necessarily anything new. I think, again, the average lifespan of a hedge fund is like 2 years. So that's not new. What's new is the story behind it and the fact that it's a very interesting story. Because in this situation, a lot of times if retail loses money, it's like no one cares, right? It's not like these other companies are going to come to the rescue and bail them out. But when the institutions screw up, a lot like in over 10 years ago, they get bailed out, right? That's what's historically happened. And so the idea is, well, what's going on now? Why are the institutions losing money, all this money, and retail's gaining money? And you can go look to see what's happened. A lot of people have made a lot of money on this. By the way, I should say this is a very risky thing to be buying right now. I'm not going to give any advice on that. This is not financial advice. I just think the story behind this is fascinating, and I wanted to give my general thoughts on it. So right now, GME is trading at 228. It went as high as over 480. In the last couple of days. Now, what happened was a lot of these retail investors said, hold up a second. It would not necessarily take a lot to necessarily short squeeze this entire thing. And if Wall Street gets short squeezed and they have to basically end up buying back more and more shares to cover their positions, and then it just becomes this feedback loop where retail keeps buying it, and then the short sellers on Wall Street keep having to buy it as well to cover their short positions. So this is what essentially happened. And so there's this big debate going on whether this is okay. Is retail allowed to do this? And this is what really bothers me. It was like, what do you mean they're not allowed to do this? I mean, if the idea is that you can't go purchase a stock or ride momentum, this is what hedge funds do all the time. I mean, a lot of what they do behind the scenes is ride momentum. One of the things we talk about on this channel a lot and that we use is momentum. When we talk about other things like, say, Bitcoin and whatnot, we've always discussed the implications of of momentum, and how a lot of short-term traditional TA I don't actually think is that valid, but momentum is one thing that is very powerful. And what that means is a stock that is moving up is more likely to continue moving up than a stock that is not. And so if you took one stock that was trending upwards and one stock that was basically trending sideways, then probability, from a probabilistic standpoint, the stock that was trending up is also more likely to continue trending up than for the one that's moving sideways to start trending up. So trading based off momentum is nothing new. Okay, this is nothing new, and I've seen a lot of interviews. I've watched a lot of the interviews from different people. I've read a lot of the stories and whatnot, and to me it seems silly, the idea that retail investors can't do what they're doing. And arguably, what retail investors have done is better than hedge funds, because a lot of hedge funds, their due diligence, where they're talking about, what stock they're buying or whatever. A lot of that is behind closed doors, and you don't necessarily have access to a lot of that information, right? But in the public, right, retail investors, a lot of it's being published everywhere. And the idea that retail is simply not smart enough to do the same things the institutions do is simply not true. We're in a day now where we have access to a lot of the same information. I mean, obviously there's going to be some differences, but a lot of the information we now have access to. It's not like a long time ago when you just simply did not have access to a lot of information. A lot of the information you can find online, and a lot of people put a lot of work into doing their due diligence and looking at what the research says, and whether that's based on fundamental reasons or based on other reasons, like noticing that stocks like GameStop were over 100% levered. How does this make sense? Like, why is it okay for a company, or not a company? Why is it okay for a stock to be levered more than the amount of stock, than the amount of shares exist? This seems to be an issue. But there's this big argument going on as to whether retail should be allowed to do this or not, right? Should they be allowed to do this? And there's been some pushback. We're not going to mention names, but I mean, there's been some pretty big platforms that have suspended trading for GameStop, as well as other stocks that have been soaring, like AMC, as well as a few others. They've completely suspended trading, so you can't really buy it right now. Like, you can't even go buy it. All you can really do is sell it. So to me, and I think to anyone with a brain, you would look at this and say, this is market manipulation, right? Is this not market manipulation? There's literally someone that is basically saying you can no longer buy this stock, and part of it is because, well, we need to protect you from yourself, right? We need to protect you from yourself. So this is basically saying that retail investors are not smart enough to navigate these markets, but the hedge funds are. But when hedge funds were not smart enough to navigate the markets, back when they got bailed out, it was okay then because we, the taxpayers, ended up bailing them out. Okay, but when it's the reverse way, it's not okay all of a sudden, right? It's simply not okay that institutions are losing money to the real retail investors. This is, we talked a lot on the channel before. As it relates to other assets that we follow, institutional money is not always smart money. This is a prime example of that. So when we talk about institutional money not always being smart money in the future, this is a great example of exactly that. Institutional money is not always smart. And what happened was, there was these big major institutions that were shorting GameStop. A lot of people realized, hey, it wouldn't take that much to cause a short squeeze on GameStop. And it just kept going higher and higher and higher, and retail kept buying and buying. The short sellers on Wall Street had to keep buying back to cover the shorts, and then you get something like this where the price went from $20 a couple weeks ago to over $400 yesterday or today. So you're talking about a 20x move, more than a 20x move in a couple weeks. And to say, from my perspective, right, to say that this is not okay is not a very fair point of view, because again, trading on momentum this kind of stuff is the idea that it's okay when Wall Street does it, but it's not okay when retail does it. This is a good example of maybe decentralized finance in crypto. And we've talked about DeFi a decent amount on the channel. Some of the coins that we follow in crypto are have that exposure to the DeFi marketplace. So this is a good example. How is it okay for a platform to just suspend trading to protect us from ourselves? Obviously, there is a risk in buying GameStop when it's up 10 to 20x, right? Obviously. But there was also a risk for these hedge funds to short it more than, to short it to the extent that there were more shares out there shorted than even existed in the company. So why is that okay? Why is something like that necessarily okay? But it's not okay for for retail investors to buy it because we have to protect them from themselves. This is what I have a problem with, because you can't have it both ways, right? It's either one or the other. So to me, it doesn't seem like they're trying to protect retail from themselves. To me, it seems like they're trying to protect the hedge funds, right? Because the hedge funds are bleeding a lot. They've lost a lot of money. If they suspend trading, that helps protect the hedge funds that have these massive open short positions. So I think this is going to be an interesting story to follow. If you haven't followed it yet, I would encourage you to Google around. Don't just take my word for it. Google around, look at what's going on. And the reason why this is important, I mean, we focus mostly on cryptocurrency. But the reason why this could be important is the fallout from something like this could lead to more people becoming more interested in things like decentralized finance and cryptocurrency in general, where you can't just have someone unilaterally decide that it's okay for institutions to do something but not okay for retail. It should be a free and open market, and everyone plays by the same rules, but you can't apply the rules to hedge fund, or you can't apply the rules to retail that you don't apply to hedge funds. And when retail becomes smart about what's going on, and then they follow that line of thinking and it works out, that's not necessarily a bad thing, right? It's just they saw the opportunity, just like the hedge funds see opportunities and make money all the time. Retail saw the opportunity and they wanted to take advantage of it. And now the institutions are screaming foul. Anyways, buying GME now would be a very risky move. And again, none of this is financial advice. I have no opinion. I don't own this as well. I do not have a stake in GME. Looking at a move like this, obviously you have to consider the risks yourself. But I think what's more fascinating is the story behind what's going on, and I'm sure you guys have seen it make its way through a lot of different of your own social media channels. But again, I just wanted to give my opinion on what's going on and say that I think that the way that this story plays out over the next several weeks and months is going to be very important, and even how it relates to cryptocurrency, because I think it could encourage more interest into things like decentralized finance. If you guys like the content, make sure you subscribe, give the video a thumbs up. Remember, we have the Telegram channel that's into the equityverse in the description below, so check that out if you guys want to talk about equities. That'll wrap it up for the video. Also, turn on your alerts, subscribe, and I'll see you next time. Bye.